So welcome to today's lesson, market structure. So today we're going to be covering over the importance of being able to identify trends by using market structure. Being able to see if we're in an uptrend, also see if we're in a downtrend, but then being able to identify if we're simply trending sideways. So market structure allows us to identify potential buying opportunities, but also allows us to identify if it may be time to take profit, but also look for selling opportunities. So market structure is a very important piece of technical analysis that you should be incorporating every single day into your charting. So there are three types of market structure: uptrend, downtrend, and sideways, or essentially consolidating when the market moves sideways. Each market structure type has its own unique characteristics. We will explore how to verify if a market is in an uptrend, a downtrend, or merely moving sideways. So an uptrend, higher highs and higher lows. You may have heard some people use this phrase in, technical analysis. So an uptrend is verified when there is a series of higher highs and higher lows with at least two of each. Price will have pushed up past a previous high, creating a higher high. If the followed pullback creates a low that is higher than the previous low, it creates a higher low. We then have a verified uptrend, right? So a higher high simply means that this high was higher than the previous high, and a higher low means that this low was higher than the previous low. So once we can identify that, it's clear to see that we are trending up. A downtrend is lower highs and lower lows. So a downtrend is verified when there is a series of lower highs and lower lows with at least two of each. Price will have pushed down past a previous low, creating a lower low. If the followed push up creates a high that is lower than the previous high, it means it's essentially a lower high. We have a verified downtrend once we have a series of lower highs and lower lows. So a lower high simply means that this high that retraced back is lower than the previous high. And this low is lower than the previous low. Okay, so essentially showing that the market is trending lower and lower. Okay, so showing that we are in a downtrend. And sideways, equal highs and equal lows. A sideways market structure simply means that the lows and highs in the trend are virtually equal. Depending, of course, on what time frame you are using, this market structure means there is uncertainty. Okay, so it simply means that people are buying here. Let's say this was $10,000 for BTC, and it went all the way to $12,000, and people sold. It came back down to $10,000, and people bought. Went to $12,000, and people sold. Went to $10,000, and people bought again. So essentially, we are ranging or consolidating. This is a form of tug of war between buyers and sellers, kind of indecisive moment of buying between a level of support and a level of resistance, coming back down to a level of support, then to a level of resistance. So if we are trending sideways, this is the market having a breather, also trending sideways to make a decision if it will continue to the upside or simply continue to the downside. Now, why is market structure important? Well, understanding market structure and simply identifying the pattern can help identify when the market may be in a trend or starting to change. In an uptrend, we have higher highs and higher lows. If price cannot create a higher high or higher low, it may be a sign that the market may be changing direction. A trader may look to enter or exit the market at this point. Opposite to an uptrend, a downtrend has lower highs and lower lows. If price cannot create a lower high or a lower low, a trader may be looking to enter or exit the market at this point, as the market may be changing direction. So here's an example of an uptrend. Here we can see our low, okay? We then see a higher high, which means this high is higher than the previous high that was here. We then pulled back and created a higher low, which simply means that this low is higher than the previous low. We then created a higher high because this high here where we peaked out and there's a level of resistance is higher than the previous high. Came back down, we hit a level of resistance again. We then created a higher low because we pulled back. This then was higher than the previous high. And lastly, a higher high because this high was higher than the previous high here. So it's clear as day to see that we are in an uptrend by simply being able to identify market structure and a downtrend. So we can see here that price pulled all the way down. It created a low before rejecting, so it found a level of support. Buyers then tried to push price back up. We then created a lower high. So we found a level of resistance, and this level of resistance was lower than the previous high, which means we created a lower high. We then created a lower low and a further lower low before creating a lower high. We then created a final lower low, which price found support. This then gave us confirmation that we were in a downtrend. Okay, so it's pretty clear to see that the channel that's being created is found by identifying market structure. So to give you an example of what that looks like on a chart, here we can see price found a level of resistance. Okay, it then also found a level of support. So here we created a higher high, we created a higher low, we created a higher high, we still created a higher low, we then created a lower high, okay, because this high is lower than the previous high. We then created a lower low because this low is lower than the previous low. We then created a lower high because we are lower than the previous high. And finally, we broke through this level of support. Okay, so once we broke through this level of support, we created a lower low, a lower high, a low. So a low is equal to previous low, so it's just a low, a lower high, and then you can see here, there was also a level of support that broke through. We then created a lower low, a lower high, but here what happened? Here we didn't create a lower low, we created a higher low and another low, but this was a change in market structure. So by being able to identify support, by being able to identify a change in market structure, you could potentially find the next opportunity to get into the market by simply identifying change in market structure. So we went from a lower low and lower high to a higher low and a higher high, followed by a higher high again. So this gives us the indication that the market may be starting to reverse. We then created a higher high, a higher low, and then a further higher high. So market structure plays a really important part to your technical analysis. And there is this little tool here, 1, 2, 3, 4, 5 down, and it allows you to add text on your chart. Okay, so you can go here and you can go, that is a higher high. And then there's another higher high. And then we identified here that we changed to a lower high. So by simply using the market structure text, you can go, hang on, well, we were trending up, and all of a sudden we decided that the market decided that we were going to change direction, which means there were no more buyers and the buyers were exhausted, and now the sellers came into play. So identifying market structure can help you identify if we are trending down or looking to reverse, right? So we got to this point, we had that was a lower low, and then we had a higher low. Okay, so now the market looking like it was starting to reverse, created a higher low, created a higher high. Okay, so if you were looking at this and going, okay, well, the market is trending down, and here we identified that we may be looking to reverse. So this was the initiation that the market was starting to reverse. This was then the next confirmation that we were breaking from this downtrend to the uptrend. And once we got our higher low, that again gave us more confirmation that the market was starting to reverse. Other than that, highly recommend using market structure on each of your charts.